Good morning, everyone. Welcome to the Euro Trade. Let's have a look at what silver is doing. But before we begin, if we're meeting for the first time, I'm Marcus Stalker D, your host. I've been trading for almost 19 years. And 13 years out of that, I've been trading for various futures companies, prop trading, obviously. I do have a Series 3, but I'm not a CTA, so please familiarize yourself with the risk disclaimer that our lovely moderator Bruno has already posted in the chat. Now, my analysis is based on a few things. The first one would be market profile. Second one would be time of day expectations, along with the average ranges that I calculate sort of in a volatility based manner. So they're kind of like volatility bands until one side exceeds. Something that is quite interesting in silver today is that we definitely have some unwinding of positions on the dealer side, which is the final part of my analysis, and that's gamma exposure. So how are the dealers positioned and what are they doing? That's where I usually derive my support and resistance areas, and then I will use market profile specific playbooks to come up with a position. Right now for London, we are actually still sitting inside the initial balance, but there is a slight bearish feel to the whole options chain. So if we fail to reclaim 63.50, which was a put area at the end of the day yesterday, but I think that pretty much rolled out. Silver is one of the products that has weekly options that expire every single day. So you have option expiries Monday, Tuesday, Wednesday, Thursday, Friday, and therefore the 0DTs are not that relevant as much as they are in some of the other products that only run on monthly options, for example. But here's what's happened since yesterday. So we had a very tough day yesterday where they were just kind of stuck between 64 and 63. And the whole price action was very choppy, very spiky. That typically spells uncertainty in the market participant eyes. And overnight we had this drop. I did manage to catch some of it. I'm still in this trade. And today's levels, the first orientation point would be 63.50. So if we reclaim that, we have a possibility of rising all the way up to 65, which still remains a pain point for everybody. Now, if we begin to drop, there is not that much to hold this down all the way into 61 and then further into 60. That is a major, major call wall. Furthermore, the implied volatility has actually expanded a bit on this whole activity yesterday, and that means fear of downside. So obviously when that happens, there's a possibility that the dealers start unwinding their call positions, and that will accelerate all of the movement to the downside. We saw that on Friday when I actually warned about the similar picture on my Twitter, which you can find underneath this video. So sometimes if things are pretty clear cut, I will post an analysis. And yeah, let's see what happens. So I'm still in this. My targets are pretty aggressive here because I am expecting that swing down at some point this week. I think we had the NFP release today, which is very odd because it used to come on Fridays, first Friday of the month. But ever since the government shut down, there seems to have been some change in the way they're doing things. So is that today? Yeah, so non-farms are going to be released today, 1:30 p.m. my time. I am in England, UK, GMT. So that's going to be interesting for everything, really, because, you know, non-farm is one of those leading indicators of how the economy is doing. I mean, the forecast here is pretty terrible. They're expecting only 51,000 jobs added. That's pretty pathetic, actually. So, I don't know, we could have a really interesting day. Am I going to keep this all through that? Well, it depends where we are, right? So if we drop below sort of 62, I will then have just about enough space to hold this into the NFP. But I'm not too crazy about holding anything into major releases because obviously the spikes can be pretty horrendous. And to make sure that I'm on the right side, I like to use large time frames. So if we have a look at what's going on the daily chart, we have gone into a bit of a distribution here, not that surprising considering the confusion of the market participants. We tested 65 once, slightly went above it, and then pretty much rolled massively away from it. So 65 remains an area of interest. And then, like I said, to the downside, we have 62, nothing really much in between. And then further down, 61 and 60, which is where the major open interest strikes are located. Now, from the intraday time frame, I like to look at where the Asia high and low were located. Excuse me, I have frogs in my throat because it is morning. So I'm going to mark off this Asia low so that I have it as a visual cue on my chart. Now the Asia range was absolutely massive. And when I entered this, I went to sleep and, could I have taken it there? Well, if I was awake, yes, but obviously that didn't happen because I fell back to sleep and then I woke up around 8. And at that point, all of this had happened. So now I just have to manage the position the best that I can in light of what's happened. So some of the reference points and orientation points that we have here, this VWAP, obviously, that tends to be a pretty good level for continuation moves if we stay below it. And then further up, 63.50, like I said, that's derived from the options chain. At the moment, there's not much there. But last night there was quite a few puts that already traded out because of this move, obviously. So now we don't really have that reference as a strong area. So the next one would be 62. And VWAP, nothing really in between. Asia high is all the way up here. That's not useful to anybody. So the next thing to look out for is Asia low, but me knowing that there are quite a few strikes at 62, maybe we bust through the 62, and then if we continue to break it, that would be great for my thesis of going all the way down to 61 and further down to 60. If we bounce from it, then it will be a classic play where the Asia market does all the price discovery, and then we just use the Asia levels to formulate the next thesis. So if we are not successful in breaking the Asia low to the downside into this unwinding hedge thesis, then the play would be to do a bounce from the Asia low and then to actually run this all the way back up to 65. Because we don't want to see 62 holding if we're looking for that big smash down into what I call the phase 4. So phase 4 is basically a liquidation move. It's a Wyckoff concept, very, very old concept, where anytime something goes into a distribution, there is a chance that they start unwinding their positions and going into a liquidation phase, which would align with the profit taking for this time of the year as well. They like to pay their traders bonuses, so that's something to keep in mind. Now let's have a look at the next thing I like to reference, which is the value area from COMEX. So this is COMEX beginning. So I'm taking my volume profile fixed range and then I'm dragging it for the entirety of the overnight session. So the value low is this purple area. What's that? It's a distribution curve. So where did the price spend most times yesterday? The value area is, I would say, a normal size, nothing outside of the ordinary. And the outer edge of value, when we're opening way below it and then drifting to it, the value low also becomes a good orientation point for further continuation. So you look for a pullback to it and then a continuation. Now, sometimes if the open is very close to that value, it opens up a possibility for a value acceptance, which is a special situation play where we expect the full rotation to the opposite side, so all the way up to 64. So that would be like a smaller intraday playbook for this particular product. But yeah, for now we're just in this holding pattern, which tends to happen more often than either of us would like for this time of day. So we'll see what happens into the London fix that typically causes sharp reversals, and that's not coming until midday London time, because that's when the price fixing happens in silver, once a day, midday GMT. So we shall see. But yeah, those are some of the levels, and to be fair, these levels can be used throughout the week. It's not, they're based on monthly options. And then all I do is basically track the implied volatility and how the minor changes of these prices are happening, but those prices remain pretty much the same throughout the week, so that's a part of my weekly plan. And then the additional zoomed in area for, reaction levels intraday. Then we have the time of day expectation, we have the London fix, we have a post NY cut that is basically a Forex option expiry every single day that can have this huge reversal effect across the board. And then we also have the Euro close, and then finally COMEX close, all of which are times of day to watch out for any kind of fading moves. So if you're thinking about a breakout into the Euro close, probably not the best on most days. So that's how you would use that. So you have an assumption of what should happen at that time of day, and then you look for evidence of that happening. All right, so that is it for now. Let's see who's in chat and how everybody's doing. So we have the Jackal saying SPX playing peekaboo below 6,800. Yeah, again, out of equities, I only really trade DAX pretty frequently, which is what these shows were supposed to be about. But yeah, so 6,800 from the end of day positioning yesterday in ES in particular is also a bit of a pain point. So if they can't break that, then some more downside. Let's see what ES look. And ES has rolled, by the way, guys. So we are in March now. So this is not December, it's not Dec, it's not Z, it's H, which is March. So yeah, make sure that you're using the correct contract. And luckily in equities and in metals, to be honest, they don't roll that frequently. They roll like every 3 or 4 months. And then it's such a big deal. I come from the commodities trading side. I'm a commodities trader. And a lot of my products, like energies markets, they roll every month. So, if you look at crude oil or something, it goes very odd for this time of the year or the month. Yesterday was... it looked good for a while, but then it just got stuck in a range. And same thing with natural gas. So here's the whole NYMEX session. This is the active session. And it seems like now London has been a lot more active in the energies than the actual main session. That happens every so often. So it's not like, oh my God, what's going on? It does happen, especially in the last... I would say last couple of years. It started happening in 2023, where suddenly Asia and London took the reins of movement. And I have a theory of why that is. I think it's because the powers that be are trying to keep the crude oil in particular contained sort of between 55 and 65. That's like a sweet spot. And they're trying really hard to keep it in between those prices, and this has been going on for years at this point. So if we look at the weekly chart, you will see that on most weeks they would get to this 50 and then bounce back into the middle between 60 and 55, and then they kind of bounce it there for an absolute age, like half a millennia, before they do anything with it. So for me, crude oil for the last year or so has been only an options play. So whenever we get to the bottom of the ranges, I like to do long options, even though they do have a problem with time decay, so you can't hold them to infinity. But I like 45-day options, where the time decay, if you're going to take off, because I don't hold long options to expiry, that's just stupid. So I will use the long options to position myself at the edges of ranges. So my areas of interest are usually 55 and 50, because that's traditionally where they stop. You can see that here 55 was a pretty long-term orientation point, and then we kind of went down to 50 and then immediately bounced back away from it. But when we get to the top, that's where I do a riskier play of shorting options. So I become an options writer. Why? Because this product has a downward bias, and once it's that high up, so as soon as we get into 70, 75, that's my cue to go naked short options, which can go wrong. It can go wrong, but luckily you can always close them early and take it on the chin if you find that the option is not doing what it's supposed to be doing. But short options, the time decay works in their favor, and that is quite good. It's something that's worked for me for the last year really, really well. So we'll see. Right now 55 is the first pain point. If they manage to bring it back up, that's great. If it continues towards 50, I would expect some big commercial hedgers to step in at 50, because if we go below 50, the WTI crude is not going to be profitable for the producers of the commodity. So 50 is like the absolute cutoff point. Some people even say 55. But the Saudis, if you remember when Mo was on, he used to trade crude oil quite a bit. So he says that with the Saudis, they can handle crude oil at $5. So this is like big fight of who's going to win, right? But yeah, for now 50 to 55 range has been a good sort of floor to run some more longer term outlook options. I'm not in favor of the outrights for this purpose, because frankly, outrights need a stop loss, whereas in the options market, especially for the long side, which I do when we get to the bottom, it's your premium. So whatever you paid for it, that's your max loss. You're not going to lose more than that. But yeah, if it goes wrong, that's your loss. But if you are in the outrights, unfortunately, you have to probably use quite wide stops, and then you can get wicked out on the inventories report or something stupid like that. And I really dislike that aspect of crude oil these days. So I still do trade it. Like, I know this product so well because it was my main sort of bread and butter for the full decade. And now I've moved away from it, but I still trade its... So when it comes to outrights, I still trade RBOB, which is gasoline futures, and also sometimes heating oil. They're heavily correlated with crude oil, but they're more liquid because they're so thin that it's much easier to move them. So therefore, heating oil and RBOB are both sitting at about 500 ticks range. That's my sweet spot for my particular strategy, whereas crude oil is still a complete snooze fest at about $1 a day. And for me, that's just like not worth it. Because, if you're looking at how much money you can make from a product, I like to have a certain range. And when that range falls below a sensible level, I just move away from it for outrights in particular. Because, intraday and prop trading, it's all intraday. You have to be flat at the end of the day. So if something happens during Asia, you're not going to be involved. I'm just going to let Crity out because he doesn't really like being in here. I didn't realize he sneaked in. And now he's sitting by the door with his nose down, scratching at it. So I'll be back in a couple of seconds. Right, we are back. Let's go back to our silver baby. Micro silver, of course, because anything else is way too big. So far it's doing okay. Still in this consolidation. So we really need to go below the initial balance. And the initial balance is this point here. So roughly, what's that? 62.78. Maybe let's put a marker there. So why is this important? Why do we want to know the first hour of trading of any active exchange? It's because it can provide additional context. Now, when I first started with Market Profile, I found it eye-opening, and suddenly some of the stupid decisions that I was making just stopped happening, like, naturally. Because I suddenly knew what it looks like to go into a sustained auction. I knew what it looked like to go into a failed auction. I knew what it looked like when we were in a neutral day, and it just stopped me. And actually it made me become a better range trader, because I sucked at range trading. Oh my god, it was terrible. And nowadays the range days are actually not too bad for me, because I'm like, oh, okay, well, it's a neutral day type already, you know, early in the day. What does that mean? It means that we extend the initial balance to both sides. You don't want to see that if you're looking for a breakout trade. And the only time I will get involved on a neutral day for a breakout is if we leave a big move outside of the initial balance to one side. So that means no overlapping candles. It just kind of goes below it. And profile is traditionally used on a 13-minute time frame. So when we say TPOs, that means time price opportunities, but it really just means one single 30-minute time period. And then you look at how that relates to the overall structure. You can absolutely use, or you know, I would say that the more advanced traders can absolutely use lower time frames to run a hypothesis of what should happen. But yeah, in general, it's been an eye opener for me in particular. All right, so we're on the main silver contract. We are seeing some bigger sellers here. So this guy is selling 36 big silvers. Just to put that into context on the size. So per tick, this guy is taking $900. So that's going to be an institutional trade. You know, when you think that, you know, a mere 10-tick move is going to set you back or make you better off by 9,000, that's not a retail trader. That's institutions. So let's see what they want to do at the initial balance low. So far it's all looking pretty drama-free, but we do need a resolution of this consolidation that we've spent quite a long time in. So, you know, ever since the end of Tokyo, so this was the end of Tokyo, we had the classic take profit move that happens right after Tokyo close. And again, I wish that I can be awake. I'm not much of a morning person anyway, and I've always gravitated towards jobs that don't really require me to function super early in the morning, because I'm just useless. You know, I make a lot of mistakes. My brain doesn't really work until about midday, and 9 o'clock is just about okay. But even that is like, you know, I take a little bit to wake up whenever I press start streaming. But yeah. Joshua says, hi Dee, if you don't mind, can you please explain how to annotate the ADR high and low? So I don't use ATR, because I know that your question is ATR. I use ADR. What's the difference? Well, the difference is that ATR will take in gaps into calculation. So if you have a weekend gap and you opened with a gap, it's going to print as an exhausted range for the day. ADR won't do that. So ADR will start its calculation at the point of the open. So for me, that's a better reference point. So that's the first step. Second step is that my ADR and, for that matter, average session range, ASR, they're a little bit different. So I use them as levels, not just as, you know, a trailing last sort of 14-period breakdown. ATR, if you watch At the Buzzer, you'll know that Coach Paul uses the stop loss volatility adjustment by multiplying the ATR on a 5-minute time frame by 2. Now that will work if you're only trading through, the most of the New York session. But I trade through multiple sessions, and whilst that's the traditional way to do it, I always found it tricky because you're mixing apples and oranges. You're mixing the lower volatility sessions, like for example, London typically has a lower range than either COMEX or Asia. So if you base your stops on the London range and the London ATR, what's going to happen to you is that when that volatility starts kicking up from about midday, London time, GMT time, your stops are not going to be big enough to absorb whatever is happening. So I have my own way of scaling stops that are based on the previous 10 days of the actual session that I'm trading. And I very rarely carry over a trade from all the way from Asia into COMEX. By the time COMEX arrives, the Asia trade typically already does what it's supposed to do. So my usual hold times are about 100 minutes. Obviously some of them are longer, some of them are shorter, depends on the day, of course. But in general, I found that my stop sizing based on a certain divider from the previous 10 days of the actual session range is the best. But I do use the overall 24-hour times. Now, this is not going to be the ADR for today. This is from yesterday. So ADR is not too far out. It's 64.30. So a little bit lower because we were pretty range bound yesterday. So let's put it that way. And then to the downside, we do actually have ADR very close to the 62 round number. So that's what we're going to do. So I'm just going to round it up. There's like a few ticks out, but it doesn't really matter. It's not an exact science. All right, so let's annotate that as well. So how do I calculate it? It used to involve some Excel spreadsheets because it's not as easy as just, going back and then plopping, wherever the price is, plopping ADR high and low. Because if you do that, that's not the true ADR high and low. So the first step would be to see where the midnight open is for me. At least that's how I calculated. So midnight open was Tokyo open, right, this little mini candle. And then I divide the ADR high and low in half. So I put half above, half below. So that becomes a starting point. As the day starts making new lower lows or lower highs, I will track that. And I do have an indicator called Blatek that does it automatically these days. But before I was in a position to commission the creation of those algorithms, I had to do it manually, so there was a lot of spreadsheets and formulas going on, and then that would all be tracked manually as well. So I would plop a line, let's say here, and then if we make a new lower low, I would see how much of a lower low we made, and then I would move it slightly down. So the idea is that the ADR high and low are volatility based until one side hits it. So if we continue to go into a lower low and lower low and lower low, the ADR high is going to keep coming down, but the ADR low is actually going to be exceeded already at 62. So therefore that one now becomes static. And also in the case of any outlier days where things just kind of keep going, if you're already late on the day, you can look for a test, like a back test after the break of the former ADR low, which is now static because that's where you exceeded the day's range. And that becomes another orientation point. Obviously quite a bit of work because you do need to export tick data and you need to track all of that day by day. So there is a free way of doing it, but it's like very painful. So what we've done now, because our indicators are at the moment only still on MetaTrader 5, we're working on bringing it to other platforms. But in the meantime, I did create a Blatek Discord with the help of my software team. And we are now printing our levels, including the market profile, including the ADR and ASR, which is my regular trading hours average ranges. They're called average session ranges. And they print the market profile twice a day and the average ranges, I think, 3 times a day. So I will double check that. And the way you sign up for that is through Market Stalker's membership levels. So they are connected, but just bear in mind that you have to have your Discord connected to your YouTube channel in order to access that. And then you get access to Plotting Discord, which is this. So many people have asked me to create this because, you know, even when we create, when we bring out the indicators for other platforms, it's not going to be like multiple platforms. It's going to be like just maybe one or two additional ones. And if you're using something like Quantower or you're using TraderRate or whatever, you just want to have the levels, right? So here they are. This is what they look like. So we had the last print was the daily range levels. Here's the NQ. So this is the equities channel, and you can sign up individually for these or for all of it. So yeah. So we'll see. You know, if you're interested in my levels, and that's what they look like. So we can even go back to show you how the market profile is done. So let's see, midnight, here we go. This is in GMT, by the way. I say that in the general support channel. You can use a time zone converter to figure out when all of these are. But it's generally Tokyo Open, London Open, and the relevant exchange for this group, like COMEX or NYMEX. That's the final printout. So yeah, these are market profile levels. So that's midnight. And then you have daily range and session range for Tokyo. This is Tokyo related. And then as the day carries on, you get yet another set of things printing. Here's London. So yeah, it's just a utility Discord. It's not a Discord where you can go and look for any coaching, because that's not what I do there. And yeah, just beware. Just beware that you're not going to get trading advice in there, or any sort of advice anywhere, because I don't do advice. I can do an overview, you know, overview of what I'm seeing. That might become a possibility at some point. But before that, maybe I need to get registered with the NFA. So we'll see. Something I'm thinking about, anyway. Yeah. So far, I'm still inside this initial balance on silver. Still inside the range. So nothing's happening. So we can just sit and chat whilst that changes. And when it changes, I will explain what I'm seeing. So very calm, a very calm trade at the moment. You know, nothing dramatic, horribly dramatic happening. Do I do intraday options? No, I do not. The Austin Times says, put some music in the background. I cannot put music in the background. It annoys the hell out of me. I used to be a musician, and if I have anything in the background as a musician, my ear then wants to know how the production is being done. And then instead of focusing on trading, I then start focusing on how the arrangement was done, what the bass is doing, how were the drums done, what the keyboards are doing, how loud is the guitar in the mix, does the vocal, like, it's just not a thing for me. So sorry, but I just cannot have background music when I'm doing this. And also, this is not a mechanic shop. This is a trading stream. If you want music, find an elevator or something, or go somewhere else where maybe people are more open to that. But I cannot have music at the detriment of my trading decisions, so no. Trading is hard enough. You don't need something else taking up your attention, right? And if you think that's helping you, good for you. But for me, I like to be hyper-focused on the task at hand. Complete silence. Complete silence. And I mean, if you go back to the trading firms that I used to work in, if anybody tried to put any kind of music or anything, everybody would just shoot them dirty looks, because it would be distracting, right? So, and however low in volume it is. It's bloody distracting for most people, so, you know. So no, I cannot do that. What time does silver open and close? Is it the same time as gold? I thought silver. Coach Jade said yesterday that it opens 20 minutes earlier, 7 a.m., not 7:20. So silver is it's technically does trade on COMEX, but there's these like pricing things that happen before then. So for example, you have this London fix time, and so from the point of view of COMEX, it is the same as gold, but then there's other little things about it, because it trades globally. It's not just like a COMEX specific product. There's Shanghai Exchange that extensively trades it. So it's like highly, it's like a little bit difficult to know and to tell you, well, this is the regular trading hours, even though it should be COMEX. But then, like I said, there's all of these other things like LBMA doing the silver pricing in midday. And it does trade on the London Exchange as well. So, and then there's like spot silver, then there's COMEX, then there's, you know, so many things. And then LME, even though it's a base metal trading exchange nowadays, it used to be precious metals as well, but they kind of suspended that a while back. And it has a knock-on effect on the volume in silver. So it's like, do you take the LME open, maybe, which is 11:40 a.m., that's 6:40 a.m. Eastern, is that like something to consider? And then the London fix, you know, 20 minutes after that. So it's difficult to kind of say, yeah, this is the regular trading hours. But when I am calculating the value areas, I do use COMEX for that purpose. However, I will still anchor a VWAP for the LME open, just to have that reference to see how they're behaving. I will also make sure to mark off the actual silver price fix at midday as another orientation point. Is that regular trading hours? No, but they are extremely important times when you do want to see how the silver behaves in relation to that particular price. Does that make sense? But it's difficult. Like, commodities can be a bit fickle when you're trying to figure out when they're trading. And then obviously you have the Shanghai Exchange, which runs overnight and starts at 1:30 a.m. GMT. And that's why you see these moments. So here is the pre-Shanghai Exchange smash, and then that's when the real move starts. So is that the regular trading hour? I don't know. Maybe. It's one of them, for sure. So because the precious metals are so globally traded, I don't think it's fair to just limit yourself to like one single exchange in particular. Like maybe if you're trading copper or something, it's very dependent on the LME. Because, you know, who else trades copper? Well, Shanghai does trade it, but LME also trades it a lot. So what's the regular trading hour? But COMEX trades it too, so it's like, So yeah, but for any kind of calculations for the session ranges and value areas, I do use COMEX. Because if you look at the volume, you know, that's where most of the volume is comprised. So I suppose that's your regular trading hours. I don't know why Coach Jay said that it's half an hour before. Maybe he knows something I don't. Maybe I'll reach out to him to see what he knows. What did you find? Because, you know, you have to understand that these exchanges, they will also change things. And if you're not like following it super closely, it's very easy to forget that, you know, they do change stuff. Like, for example, a few years ago, I think about 6 or 7 years ago, because most platforms didn't allow people to start the candles on the 20-minute past for COMEX open, they then started considering the 30-minute past as the, official open for the electronic trading on the metals. So I was like, well, great. Is it 20 or is it 30? Like, well, what are we doing? And then you have the old school traders that are still starting to trade it at 20, but now officially it's like, it's the bottom of the hour start for COMEX. So all very confusing. It is very regulated, but again, if you're not following the news that they're constantly releasing, you can miss it. Same thing with like crude oil weekly, bi-weekly options. They were introduced last July, and most people who are in energies, they don't know they exist. They're like, oh yeah, monthly options. And I'm like, but you have bi-weekly options in crude oil. It's like, yeah, since when? Since July 2024. They're like, really? And I'm like, yeah. But, I try to keep up with it as much as I can. But even I will miss, some of those occasionally. Sorry, that's my Cavalier. Right, so let's have a look at another question. What does gold and silver respect the most? It's ADR. Yeah, I mean, there are days when it overshoots and reclaims, but it's still a good reference point. And it's not just silver and gold. Every asset class has an algorithm out there that is running on the basis of exhaustion of the daily ranges, statistical quantitative extremes. So that's a very good sort of hedge fundy style of trading to position yourself better. And if you have patience, if I had patience to only ever trade ADR and ASR reversals, I wouldn't trade very much, but it would be a very high reward and low risk. Because at the point of the exhaustion of the range, all the risk is pretty much gone. Like the risk just is very minuscule. And the beautiful thing about ADR quantitative extremes is that they are not necessarily connected to the structure. They exist independently of that. That's why I love them, because even if you're at the all-time highs, you can still see where that exhaustion of the range is going to come into play. Never mind where the all-time high is, right? So it's a beautiful, beautiful thing to implement in your trading style. But obviously we can't just trade ADR high and low. I'm preparing a video that will explain how to use them. So I have 3 strategies that I hurt my back on Sunday. It's getting really annoying. So I'm trying to stay comfortable as much as possible. But sometimes I get like a twinge. So I'm preparing the video to explain the use of ADRs the way I do it. And whilst it's not like, I wouldn't say that it's like, oh my God, it's revolutionary, because I know that there are other people using it. Now, I don't know how much my influence on that change is, because obviously I have over 10,000 students across the globe where, because I still have courses on Udemy, and I have my own main course. So out of those 10,000 people, I've had like 3,000 people that came to me for the main sort of pro development course. And I go in like in-depth explanations of what and how and all the concepts that I use. And it's a CPD certified program, which is why people gravitate towards it. So it's not for the lighthearted, for the weak-minded though, because it requires you to be dedicated. It's a structured program. I even have a little drip feed system there to prevent you from watching it like it's a Netflix series. Because I'm not there to, from the coaching perspective, I'm not here to just provide you with information, but also to get you results, right? So that's always been my focus. How can I make somebody's trading better based on my experience? And, sharing your experience is the most beautiful thing you can do with people. It's very rewarding. And, when somebody tells me that they've been struggling for 2 years, that they've been in a spin cycle of constantly blowing up and never getting to a payout, or getting one payout, then nothing for a year or two, I really love the moment when it all comes together and they go, hey, Dee, just requested my first payout, and then the next one, here's another one. It really speaks to the trader's growth. And maybe it's a bit selfish, but that feels good to me. So, you know, at the end of the day, I have no human children, and my only legacy will be imparting knowledge to others. And in many ways, that's a better legacy to have than trying to have a child and then trying to get all of your unrealized ambitions and transfer it onto the poor kid. So yeah. But that's why I do it. You know, it's a very rewarding thing. But yeah, so it's not like, oh, I invented ADRs. No, they've been there for probably as long as the markets existed. However, the use of it, I think it has become a lot more widespread. Maybe partially because of my courses on Udemy, maybe partially because of these streams and TopstepTV. I don't know, but I am noticing more and more people mentioning ADR. So, you know, do I want credit for that? I don't care. Honestly, I really don't. As long as people can derive some use out of it, I'm happy. Even if, you know, they don't say, hey, I heard this from D. If I start seeing ADR reversals and, you know, or trading towards the ADR all over the place, it's my job done, right? What does the London fix on the current price in gold mean? Okay, so London fix on gold is actually coming in 10 minutes time. And all that means is that the institutions will be using this time to reference gold today for the AM session. Now, gold is different than silver because it actually has two fixing moments. The other one is at 3 p.m. Both of those can cause big reversals, and the 3 p.m. one is a bit of a double whammy because it also has the connection to the Forex New York options expiry at the same time. Gold is very connected to the US dollar, so whenever you have a big option expiring in any of the dollar-denominated currencies, that will have a knock-on effect. So anything over $1 billion is considered a big option, especially if we're talking like major currency pairs. Like, I don't trade currencies anymore. I started in them, so I traded them for 5 years, from 2007 as a swing trader. I'm not interested in them on an intraday time frame because I think the ranges are still pretty pathetic. And again, on the account of me needing a certain amount of follow through and the max amount that I can make in a day based on that range, that matters to me. So yeah, but London price fix for gold is coming in 10 minutes. We can actually watch it. The assumption is that usually you get either a sharp reversal or some sort of a continuation, with the sharp reversal being the slightly more statistically relevant stat. So what does that mean? It means that most times if we are still sitting just drifting, the London fix is going to go up, or post-London fix, we're going to see a move up. I don't know whether that's going to happen today, though, because both gold and silver are in a bit of a precarious situation from the dealer point of view. You know, on the weekly chart, gold is still range-bound, right? So we still have this distribution looming over us. How does that resolve? I don't know. We've had rally, base, rally, base, rally, but still no all-time highs. So it's like, if the dealers start pulling their orders or closing out their calls on gold, that could get pretty ugly, especially with NFP today. So I don't know whether today is a good day for statistical relevance, because it is an outlier day due to the NFP. And whenever you have an outlier day, any statistical probabilities unrelated to the NFP days, they just fade. And then we also have this other thing where now the NFP seems to be on Tuesday rather than on Friday. It's like, what are you doing, government? And why? For you know, almost 19 years, I've had NFP first Friday of the month, with the exception of holidays, and then they would move it to the next Monday. But now, This is like the second one that's coming on Tuesday. Is this now a normal thing? Do we now get NFP Tuesdays? I don't know. It's just... It's how the markets change. So we'll see whether, the same behaviors. I mean, we can expect volatility, that's for sure. Are we going to get any dedicated movement from it? Don't know. If it's a really terrible number, I mean, to be fair, this expectation of 51,000 jobs added, the forecast, that's not going to be difficult to beat, right? So even if it's like a little bit better than that, that's likely going to be considered a good thing. Because let's face it, the country the size of the United States, adding 51,000 contracts across the whole of the United States, that's pathetic. It's like, it's a bad number. So... is it the effect of AI? Maybe. But I don't think so. I think there's something else going on there. Maybe cold weather or something. We'll see. But isn't this like the numbers for October or something? So again, it's going to be interesting. It's definitely going to be interesting. So, yeah. Okay, someone's saying, I just joined the metals. Can't wait to check it out. Yeah. Siwa says, was the Discord shared where the levels only are shared, no education? I didn't see it. So no, I'm not going to be sharing any kind of server link to it because that's not, then I would have to go and manually assign people. And I don't want that part of admin. So if you want to check that out, just go to my actual channel, which is Market Stalker D, not TopstepTV, okay? And there's no link to be shared. If you have your YouTube connected to your Discord, which is the first step you need to do, if you've signed up to the levels via the channel memberships, you will automatically get access to it. Maybe not immediate access because there's this timeline of manual syncing that happens, or automatic syncing that happens for the Discord servers, and I think it happens several times a day. But yeah, the only way to sign up is through YouTube memberships at the moment. Maybe that will change in the future, but for now, that is the least amount of pain for me. Because, if I start getting, 100 people signing up, I then have to manually manage those 100 people, and then I can't trade, because my whole life is going to be around manually managing memberships. That is not what we want to be doing. We want to maximize our free time, not put ourselves into another prison. So yeah, they are there. No education, though, just so you go to the channel, click join, and then it's going to come up with the options for the memberships. So yeah. But you have to connect your Discord to YouTube, step 1. And again, if you do have any troubles, I can do a manual sync as well. So I do have the power. I've got the power. What is my point of view for gold? Well, it's very similar to silver, except I think it looks a bit more precarious, to be honest. Silver looks cleaner to me. We did have the all-time high. We had a pretty nice sort of positioning. I mean, I can go and derive some data for it if you give me a few mins. So this is going to take a while. Let me just see what range of strikes I should do. Is that enough? Yeah, that's enough. Okay, let's just do near the money. Analysis. So this will take a little while because I need to plug it into my little algorithms here. Okay. Okay, so hold on. We just pull that. Did I do that already? Hold on. Just need to check the timings. Because I may have done this already earlier today, so then... No? Okay. Losing the plot. That's great. It's on a Tuesday morning. Alright, let's have a look. What does it spew? Alright, so this is just going to be like an overview of how the price map is kind of looking. How do we do this? Let's save that. So the first thing is the, I like to look at the actual price map, right? So this is what we're looking at. So there's a big level at 4,300. Kind of a bit put heavy though, see? So that's if we break that, that's going to be a riot. Now if we go above, I would say Asia. Where's Asia high? No, that's too far. The nearest high here is 43.18. So I suppose if we reclaim VWAP, then you can expect the prices to keep going up towards the next major cold wall, which is at 43.50. So we have over 2,000 open interest there. If they buy to hedge more, then all hell breaks loose to the upside. But if you have all of these guys who are 8,000 puts at the 4,300s, if that starts to unwind, you will see in the short term, 42.80 becomes the next area to look for some profit taking moves. But if that doesn't hold either, that's going to be interesting. However, the implied volatility is not anything to speak of. Traditionally, volatility on gold tends to float between 15 and 22. We are in that range right now, right? So if it goes above 22, that means fear is set in, and that acceleration to the downside is going to get very ugly. But this is at the moment just moderate implied volatility for gold. Perfectly normal. There's no fear. So the sell-off is orderly. Nobody's afraid at the moment. That could change though. So I suppose your key levels that you want to track is 4,300. So obviously the one that it's trying to go back to right now, which is the Asia low as well. So they tried it already. So Asia low is just underneath that. There. Let's put a marker. So 4,300. Asia low. With a view that if we close a 15 or even a 30-minute candle, which is even better, without any major buying wicks, and it certainly doesn't pull back into the Asia range, that is then trouble, okay? But on the first try, they failed. However, they're now bleeding slowly towards it, and the fix has just happened. So we have the London fix. Let's mark that as well. And it is NFP, so they could unwind before the NFP, just going to protect themselves. So let's do, that might be gray actually, that could be. Let's see how the price behaves. So sometimes you can get a move that is a sharp reversal, but it ends at VWAP. And then it starts rolling back. So again, VWAP is your orientation point for further upside. 4,300 is your orientation point for downside. Anything in between that would be a range trade. So I suppose you could say if we reject VWAP, there is a short here, which would be a better short than running a breakout through 4,300. And that aligns with the same or similar positioning that I have expressed in silver. So I am looking for that flush down. I'm not really, just because silver, like the gold did not expand in volatility, but silver did. So that's where they're very, very different. Expansion on the downside move, that spells fear. No expansion, very moderate implied volatility. It spells orderly sell-off. So right now they're a bit different, definitely. And then to the downside, like I said, we have 4280. Now, if we start to bleed below that, I mean, I don't see anything too relevant. Like this is very thin after that. If we go even to 4250. And then we have some other kind of interest way, way down at 41.95. So, you know, if it starts to go down, I really wouldn't, I wouldn't stand in the way of that. But I also wouldn't jump in. I would want to be in that move already somehow. But I'm on silver today, so I don't know whether I'm going to be trading. May I ask how long you have traded with Topstep and also how well the payouts have been? So I don't have a problem with payouts. They typically arrive within a day. The only time they've arrived within 3 days is if I did a payout request on a Friday. Because obviously they don't work on the weekends. So nobody's going to be there to process your payout, right? But generally for me it arrives within 24 hours, sometimes less. And I do use Wise for that purpose. I've traded with Topstep for 10 years. Go figure. It's going to be over 10 years soon. I found them in 2015 when I came back from Chicago and I was looking for a Chicago-based remote option prop firm. The only thing that existed at that time was Topstep. So I got on board with their funded the evaluations, the combines, and I became their first female funded trader, which led to me meeting Hogue, Eddie, MP, who was calling themselves Nebraska back then, and then I did interviews and I was doing guest appearances on Squawk Radio. So also when I met Hoop, we were in chat. He was still running his fundamentals class even back then. So my journey with Topstep spans a decade. It's not something that just started. They didn't just randomly find me. And I have a lot of firsts with Topstep. So, you know, first female funded trader, first live account on Topstep X. All of the bugs went through me. Yay. But I did kind of sign up for that as well. I said, yeah, let's test it out. Because I'm a coder as well. Not that I'm a QA or anything, but, you know, I was like, let me try and trade and then just ping you all of the bugs that I come across. Now, the bugs at that point, you know, you guys think that now they have issues. The bugs that they had back then were you know, just the infancy of you know, the baby Topstep X. And we did manage to do quite a lot of bug fixing back in the day, 2 years ago, whenever it started. But yeah, there's still, you know, the issue of Topstep growing too fast. So now we have so many traders. And I don't think they planned for that. Like, I'm going to be honest. I think all of these slight malfunctions that we get, I think it's due to the volume of people. You know, I saw somebody going, oh, they're going bankrupt. No, I can assure you Topstep is not going bankrupt. It's quite the opposite, right? And I just find it funny that people are like, oh, what's going on? Fix your platform. It's like, great, but we have grown past whatever. And they're trying to fix it. Like, trust me, the whole IT team is working around the clock to get everything sorted. But then you get more people signing up, and then they decide to do the no activation fee option, and then another run on the whole system happens. So, it's growing pains. It's a good thing. So, I have to remind everybody that whenever you see the part about the option, the platform malfunctioning. This is a new platform, guys. I've worked on platforms before, and it's usually like 5 years before they're even ready for release. And yet they started on Topstep X, and then 9 months later they had a workable platform. Now we're like 2 years down the line, but it's still a new platform. It's still in development. So, I have to put on my, coder hat for a second and go, actually, this is pretty normal. So now you have a ton of people that are using it, and they're still working things out on the back end. So it's like MP said, they're building a plane in the air, and it's exactly what it is. So, I'm somebody who has always admired the innovation of Topstep. They were the first. If you didn't have Topstep, none of these other firms would exist. They were the pioneers. Nobody ever heard of remote prop trading via valuations before Topstep opened in 2010, and then they started getting more popular. But then it wasn't until 2020 when everybody else decided to jump on it. So you have the pioneer of the industry that's still innovating, and you have other firms, and that some are better than others, but as a whole, they're kind of harming the industry. In my opinion, not all of them. There's some that are like, what are you doing? And clearly some decisions are being made just to generate more cash. It's like total cash grab. But yeah, it's a bit of a weird spot that this online prop industry has gotten itself into. The whole rushing 3 evals, I'm really not in favor of that, because I think it very much affects the psyche of the trader, who now has this arbitrary timeline. I want to remind everybody that just because you can get funded in 2 days or no days, it doesn't mean you should. It is not an invitation for a timed challenge. There is no time challenge. You can spend as much time as you wish. Most people, even if they take it super slow, keep their downside reasonably under control, you can pass it within a month. You don't need to pass it in 2 days, especially not if you're somebody who's still struggling, you're not consistent with payouts, and you have like one payout, then nothing, and then, a year later, maybe you hit another one after 1 million combines. That is not a good thing. Like, you need to have one combine, one XFA payout. That's the rate, the return on investment that you should aim for. If you're not there, just stay in one eval until you are there. Then it's time to scale up. Then you can do whatever you want, right? But make sure that you get 3 payouts per, like in like the 3-month period, that you get 1 payout per month for 3 months. Then you'll know you're ready. Anything outside of that, I just look at it and just roll my eyes, frankly. So yeah, I got a payout. And I'm like, great. Now do that for a year, or at least 3 months, 6 months. And then you'll know whether what you're doing is sustainable. Everybody can get lucky, especially on equities. Oh yeah, it's going up. Oh, whoopee, let's buy the effing dip, yeah? And then they make like a killing, and that causes a false sense of confidence that they know what they're doing. And then we get into a range-bound day, range-bound period, rollover, and everybody's like, price action is shit. That's a shit. It's like, yeah, it's shit because you don't know how to approach it, and you don't even know a rollover is happening. Like, did you see the main broadcast? What is the rollover? Are you kidding me? It's like you're trading futures, apparently, right? You don't know what a rollover is? It's like, come on, basic research. Futures basics. The first thing is going to tell you that futures run in quarterly or monthly contracts. So your next question should be, what are these quarterly and monthly contracts? But no, people just open up a chart, click, and they think that's how they can change their life for the better. It requires a hell of a more skill than that, guys. I'm sorry to say, but that's like a bit of a naive look. It's kind of like wanting to become an Olympic medalist, then jumping into the pool once and somehow managing to swim, one time to swim pretty fast. And then you just go, well, I don't want to qualify for anything. I just want to go straight to the Olympics and go up against Michael Phelps because I can do it. And then you realize how much you suck because you realize how much more skill those people have. They train every day, 8 hours a day. They go gym. They have special nutrition. It's just beyond weird to me that people want to become very rich from trading, but they are not willing to. Like somebody said yesterday, because I said you have to be serious about it. You have to write a weekly plan. You have to write a daily plan. You have to have some sort of an approach. I don't have the time. Oh, but you have the time to waste years doing the same thing that doesn't work consistently or at all. You have time for that, but you don't have time to spend, 2-3 weeks sorting out your levels and a plan of what you want to do and where you want to do it. Do you want to be a buyer or a seller? Why? Where? What do you want to see? No time for that. Okay, cool. You do you then. And at that point, I don't want to talk to these people because it's like, well, you're just not serious enough. Oh, but I want extra money. Well, then you're going to have to work for it a little bit. Not in actual active trades, because the biggest part of trading is just sitting there and not doing anything for extended periods of time. And people find that very difficult because our little brains, they work in a very interesting way where if you look at a chart, you'll try and find a pattern and you will start seeing things because you want to be involved. Therefore, that motivation to get involved takes over and then you start doing stupid things. But write a plan, have a plan with levels. Guess what? You're not going to be nearly as inclined to enter a nonsense position if you know that the dealers are, for example, positioned higher up or lower down. It's like, why would you get involved in the middle where there's nothing going on and you're just getting involved in a random walk? So that would be the first thing for me. All right, so 10:30 a.m. London fix is having a bit of an effect on gold and it's pulling silver up with it slightly. But at the same time, silver's still inside the initial balance, still just dancing around VWAP, not doing much. So yeah, very, very range bound, all of this gold. Google Works says, I'm holding my 1 MNQ from 25,116 to NFP. Just don't hold it into NFP, please. Especially not if there's no... Although you're in 1 MNQ, and I'm guessing you're in an XFA, so it is SIM, so you should be okay. But just know that in the future, it's a bad practice to hold things. Because you get a lot of slippage. And sometimes the platforms, even AMP on me, gets like locked up during high risk releases. And what should I do? Go to AMP with my live account and go, hello, AMP, can you reset? Give me a reset. It's like, it's a live account. There's no reset. So yeah, I don't know. Just don't do bad trading habits, please. Because, whatever you're doing now, it should be preparing you for how you're actually going to trade in, the real live markets. And there are strategies that just don't work in live because of slippage, because there is a real bid and ask going on, because there's real liquidity contracts rather than simulated contracts. Like, for example, if I go onto a sim and I enter a position on heating oil, which is thin AF, right? And yet, on a sim, if I plop in a 10-lot position, A, it's not going to move the price, and B, it's going to fill me immediately. Does that make sense to you? It's like, look at this dome. It's like there's nothing in there. And they're like, yeah, you want to trade 10 heating oils? Cool, we'll fill you. It's like, that's the difference between sim and live. You try and do that in live, and you click with 10 contracts. First, you're going to wait forever because you don't have preferential fills on the retail side. And second of all, when you do get filled, you're going to take all of this. So the price is going to jump markedly taking all of these guys or these guys here and taking that liquidity. So you're going to cause a jolt in the markets. Don't do that, you know. You have to use evals and XFAs as a kind of dress rehearsal for what you're going to be doing for real. Or you can just be sim farmer, you know. Is that a sexy job description? What do? I trade sim for a living. I don't know. To me, it's just like so pathetic. It's like, it doesn't matter how much money they're making. It's like, but you're just effectively playing a video game because you're not actually in the markets. You're not actually a speculator. You're not actually a market maker of any sort. You're not a part of the, I don't know, maybe it's me just being Granny D over here, but, you know, to me, sim is like, meh, great. You can scale up on sim, awesome. But then take that, all of those scaled up funds and get back to live, you know. Take it as your own capital. Trade your own money. You know, that's ultimately the goal, to trade your own. Although at this point, I don't know. I mean, I have my private accounts, obviously, but I still find prop payouts pretty sweet because they're like cherry on top. it's like, yes. What things should I buy? More biscuits for dogs. Yes, very expensive biscuits. Kyron is asking the question that I answered earlier in the stream. They're asking, what does your ADR low and high line mean and where did you get them from? So if you go to earlier in the stream, I actually explained that very, very detailed. So please try to rewatch maybe, and you will then understand how it's calculated and what it is as well, because I actually explained it pretty like literally gave you the math for it. So didn't do equations, don't want to scare anybody, but I did explain the process behind achieving the ADR high and low as a level on the chart. Where's the call and the put wall on gold? Well, I mentioned that as well. 4350 is the call wall, but 4300 is GEX 2, right? So there's reasonable amount of puts there. There's like 8,000 puts there, but it's not exactly a put wall. I would say the put wall was at 4335. But I think those traded out. And then the next put wall is all the way down at 4100, which I don't know we're going to get to today. So I don't think that's a relevant. I don't know, maybe NFP pushes all the way down there, but depends what the NFP does. So for now, it's all pretty meh and quiet. Anthony says, how can you untrain bad habits? For example, not being good at losing. I would first make sure that your plan is based on the actual something that is undisputable. Like, this is why I like gamma exposure, for example. This is why I like the profile as well. Because undoubtedly, the value area was here. And again, undoubtedly, we have positioning at 6,200. Okay, so that becomes first support. Again, undoubtedly, we know there's interest up at 65, but also we know there's VWAP. So you can untrain your bad habits in several ways. So having those orientation points that are non-negotiable based on the actual dealer positioning, for example. Second of all, not staring at the 2-minute chart or 1-minute chart or 30-second chart, but instead basing your decisions on 15 and 30-minute time frames. Third, if you're an NQ trader, get off NQ. There's other products out there. I really believe that more than half of you who are trading NQ and you suck at it, that you're not bad traders at all, that you're actually really skilled. But the size of stops required to hold a position in NQ would be more along the lines of 50 to 90 points. And ask yourself, what's your stop size? I bet it's going to be 10 to 25. So unless you're like a super short-term scalper, which again requires inordinate amount of discipline and heavy clarity of what you're doing, what your playbooks look like when you're a scalper. But being a selective scalper is yet another thing. You know, I'm not very impressed with people who just click buttons. And if you're doing that, you should be market making via some sort of an algorithm, not clicking buttons yourself. So it's like, what are you doing? But selective scalpers to me are riveting. Why? Because they're looking for specific order flow events at their price point. So not only are they super, super patient with where they get involved, but they take their money and they're happy. They don't chase. They're happy to take like 10, 20 points even if it runs 1,000, okay? So that is the difference. Now, if you're struggling with bad habits, I would really look at your approach. Like, how are you just sitting at the chart, drawing some lines, and that's it? Do you know what my plans look like even now? Like, in order for me to capture the amount of ticks that I want to capture every day, which is between 30 and 60% of the entire daily range, I need to be highly specific with my levels. So I can't just do, oh yeah, let me just do a long above VWAP, because that's the middle of the range. So if I want to run a long, I need Asia low. Otherwise, it's a nonsense trade. Like, what am I doing? And how much can I catch? Well, only in the case of a mad run upside do I have a chance to maybe grab, you know, maybe like a quarter of the day's range, because that's all that's left. But if I want to get more, I have to be super selective. I have to base my analysis in the gamma exposure, value areas, ADR high, ADR low, and the time of day. You know, I don't sit here all day long and just waiting for things to happen. If I don't get my setup during this stream, I will actually just sit it out and come back in the afternoon. I won't even look at a chart until 3 p.m. my time. So then I have different levels. I have COMEX, I have, you know, more volatility, and I have the Euro close looming. And in and around those times of day, you typically get the takeouts of Asia low or Asia high, which provides me with yet another reference point. Or sometimes it's the overnight high, overnight low. So London makes a new low. That becomes my reference point for COMEX, takeout and reverse, right? So all of that keeps me on the side. And, you know, don't forget, I also code mechanical trading algorithms. Now, I've got to say that to me, running back tests on hypotheses and coming up with statistics. Now, I do that with AI these days. I used to do it manually, but so I used to have to actually code up something to run as a backtest. I used to use Quant Connect for that. But these days I run it all, you know, I basically give it tick data, and then I will run hypothesis of something that I know is true, but then I will play around with the numbers. It's like, well, what size stop loss would be working here? And, you know, I have different prompts that are pretty detailed. But remember, I'm a systematic trader, so I know what sort of a prompt to do. If you give it a shit prompt and a shit model, that's what you're going to get out of it. So you have to have a working model that you know has proof of concept. Whether you've been able to take advantage of it or not, that's an entirely different aspect of trading. There are, like, for example, strategies that we know are pretty high probability. They're statistically relevant. In metals, in particular, we know that Asia high and low typically are the price discovery for the day, right? So a lot of the times, the other sessions, so London and COMEX, they will then come in and frequently take out those levels, because that's where the stacked stops are. So call it liquidity, call it whatever, but you know that at 62 there's going to be a whole bunch of stops. So if it was any other day without NFP looming over our heads today, I would actually be looking at a, and not having so many dealers long positioned that they might start closing out, causing a huge problem to the downside. But let's say that's not present today. And let's say that we've had, stable or even diminishing volatility, implied volatility in the options on this drop. It means that the drop was healthy and orderly. Therefore, more longs can be considered. That's not the case today. But if it was Asia low for sometimes during COMEX and a reversal would be my choice of entry. Why? Because it's based on options dealers positioning. It's based also on my ADR low, so quantitative extreme, along with a whole bunch of people positioned there. Today it's the puts. If it was the calls, if we had a bunch of calls there, that would mean an even stronger level. So me getting involved in an additional short down there on the day when calls are here, this would be a punt. And for me, a very high risk trade. Why? Because really, if you want to be short, based on this chart, you should be short from 64. Now, I was a little bit late on this, so I woke up and I saw that we had this smash, and by the time that I fumbled around, not the best positioning. So I'm fully aware of that. I'm not like, oh yeah, my stop loss is excellent. But my stop loss is also well away from VWAP. And it's also well away from the former pain point of 63.50. So that's all in my head as I'm diagnosing a chart. I'm not just sitting here and going, click, click, oh yeah, let's just do it because I think it's going down. There is an approach and a process behind it. So until you develop that, you will struggle with overtrading. You will struggle with clicking buttons at places that don't make any sense. So here's the thing. Decide where you want to be a buyer and where you want to be a seller. Key price levels, okay? Then set alerts. Like you can set it on TradingView and they can come to your phone. Don't sit at the platform until the alert kicks off. Because that means, the price has reached it. Now I want to see what's happening. That's the point that you sit at the table and start looking at the markets. Now it's a little bit different for me because obviously I run the streams and I have to be here, like regardless of what happens. Does that mean I have to trade? No. And if you look back, a lot of the times I'm either on combines or I'm actually not trading at all. I'm just sitting here talking, teaching, coaching. We're talking about how to pass combines, how to sort out problems, just like you asked. And, I don't feel the pressure to trade until my levels have arrived. Does that make sense? So sort out your process. Figure out the statistical areas of probability based on real order flow rather than like moving averages, RSI, and all of that nonsense. And then look how price behaves once we're there. Don't trade before then. Train yourself to stay away. But I will tell you that once you start using these levels with open interest, distribution curves, so value areas from profile, and once you start having these references, it's a complete game changer because you're suddenly not chasing. Suddenly you understand what is happening. Like right now, I understand we're in the initial balance still. That nobody from the other time frames, so the big boys who are looking for positional trading, they're not here yet. Why? Because we're still inside the initial balance. The other time frame participants, as they're called in market profile, they only appear once we get out of the first hour trading range. But the first hour trading range is market maker territory. It is also random walk territory for some products if it's out of hours. What's a random walk? It's basically just algorithms pinging the price back and forth and causing usually range-bound price activity, but it can sometimes be liquidity spikes either side. And if you're into trading tight ranges, maybe that's a strategy. That's what Dolby does, for example. It's not mine. Sometimes I will do range trading if nothing else is on offering. If there's nothing else, we're sitting in a neutral day or inside, I would try a range trade or few. And I'm actually decent at it. I wouldn't say that I'm the best range trader, but after so many years of trying to improve that aspect, I actually became decent. But I will not range trade if I think there's an opportunity for a swing. So right now, I think there's a big opportunity for a downside in silver. Why the hell would I want to smash in 1 million trades and lose my capital on like so much work when there's a clear indication in the options that we might be in for a big reversal downwards towards the 60 level? So work less, work smarter, not harder, but also sort out your process, and maybe try using some gamma exposure levels that actually have some real data that the dealers use to position themselves. So then trade with the dealers, don't trade against them. And that will naturally just sort out your confidence, that will in turn sort out your overtrading tendencies and bad habits, whatever the bad habits are. Now, once you get there with the process, you may want to take it a step further, and you may want to start isolating the biggest problem in your trading. If that's moving or removing your stops, that would be your first hindrance to the profits. So then you write it down as a task for the week. So what are we doing this week? Like as if you're in school, right? What are we doing this week? This week, we're not going to be moving stops. We're going to decide on the appropriate stop placement, and we're going to stick to it based on the volatility of this product. So it's not a random stop placement, but it's actually based on the volatility of the product, which will enable you to stay in the position for as long as it needs to actually benefit from it, rather than getting chopped up because you're trying to use as less stop and as small a stop and as big of a position size you can possibly get. That's just greed. That's not a risk model. That's not data-based. It's just you going, I want to trade my P&L. So you see how I have ticks here? And I generally like to hide all of this when I'm by myself, right? I just do this for the benefit of you. It's like, oh, how much is she in profit? But I don't like seeing the numbers. Why? Because I trade very different sized accounts. So one account is massive. The other one might be a micro account. This one is somewhere in the middle. So it's like, what good is it that I know that it's 670 ticks in profit when another one will be like, peanuts in profit, or the other one would be, 7,000 in profit. It just doesn't translate very well. So I like to keep it scalable. But each of those accounts is 71 ticks profit. That doesn't change. So hide everything P&L related so that you can completely focus on the process, and you will see the difference in your trading. But when it comes to actually dealing with particular pain points, you need to do them systematically and methodically. So you decide what is your biggest problem. Then you spend 2 to 3 weeks doing a goal to not repeat that. After 2 to 3 weeks, you then say, actually, let me see how I've done. Did I do the task? Did I stick to it? And if not, increase it for another 2 weeks until that tendency to do whatever it is the Muppet moment you're doing is either minimized or in some cases completely eliminated. But the good levels that have meaning behind them has to be the first step. Absolutely. All right, that's all I have for you today. We're at time. And I don't know if I'm going to be on the main broadcast any time. What do you consider a super short-term scalper? Somebody who holds positions for like a minute, a few seconds, and then they're out. Super scalper. And then you have the medium scalpers that aim for a smaller amount of ticks, but they're not really time-based, so they don't care about the time. Those are actually my favorite because they're using a level, they're using order flow, and then they just wait for their intended target to hit. So yeah. But yeah, hyper scalping, if you're a retail trader, completely pointless, too much work, and not as much cash either, because the commissions will eat all of it. I know that you technically don't have commissions in the combines, but you will have them in everywhere else. So keep that in mind. This was all I have for you today, so thank you so much for joining me. Hopefully you derived some value from this class. I will see you again tomorrow for another episode of the Euro Trade. In the meantime, have a lovely day. Don't hold your positions into NFP. I'm Marcus Doherty, And this was the Your Trade on TopstepTV. Hey, that rhymes. Have a lovely day, and I will see you very soon. Take care.